Hello, everybody, and welcome to this new episode. Today, we're going to talk about investing in AI startups, which could be the next big boom for investors. Artificial intelligence is transforming industries from healthcare to finance, manufacturing to retail and entertainment. It's no surprise that there has been a recent surge in AI startups looking to capitalize on this trend. But how can you identify the most promising AI startups and where can you invest your money? Let's find out. This episode is brought to you by our platform, the largest global marketplace for investors to discover and invest in private companies. Companies like SpaceX, Robinhood, Affirm, Rivian, Wish, Fair, and many more have launched their funding rounds on our platform. So firstly, why should you care about investing in AI startups right now? Currently, there's an explosion of AI startups. According to research firm CB Insights, AI-related startup activity reached an all-time high in 2021 with more than 3,400 deals globally. And here's a quick chart showing the increase in funding over time. And these companies are being valued at billions of dollars. Look at this list of top 10 AI startups by valuation. You may have heard of some of them, like OpenAI or Scale AI. So it's not too surprising that investors who've been early to AI have seen massive returns. Take, for example, Index Ventures, who invested in OpenAI, and Inflection AI, and its investors include Microsoft, which took a 49% stake in OpenAI, valuing it at $86 billion. So this means Index Ventures' initial investment may have returned over 1,000x in just 2 years, making it one of the best performing investments of all time. Okay, so let us take a look at the current startup landscape and explore some of the key AI sectors and trends. We'll also discuss how to analyze a company's fundamentals to identify the most promising ones. So the first sector is healthcare, where AI is being used to develop new treatments and therapies, improve diagnostic accuracy, and personalize patient care. One example of a successful AI healthcare startup is Tempus, a company that uses machine learning to analyze patient data and develop personalized cancer treatments. In 2021, Tempus went public through a special purpose acquisition company and is now valued at nearly $5 billion. Another interesting company is Freenome, which uses blood tests and AI to detect cancer early. They recently raised $110 million in funding from investors like Samsung and Temasek. So this shows that investors are still very much interested in AI healthcare startups. The second sector is finance, where AI is used to develop new financial products, improve risk management, and enhance customer experience. For example, there's a company called Alloy, which uses AI to verify people's identities and prevent fraud. They've raised over $100 million in funding from investors like Canopy Ventures and Tiger Global. Another company, Upgrade Labs, which offers financial services to gig workers, recently raised $15 million from investors like Andreessen Horowitz and Coatue Management. The third sector is automation, where AI is being used to automate repetitive tasks, improve efficiency, and reduce costs. One example of a successful AI automation startup is Opath, a company that uses robotic process automation to automate repetitive tasks. Opath went public in 2021 and is now valued at over $4 billion. Another company called Covariant uses deep reinforcement learning to automate warehouse operations. They have raised over $100 million in funding from investors like Tiger Global and Index Ventures. So what are some of the current trends in AI startup funding rounds? Well, according to data from PitchBook, AI startups are raising more money in later stage funding rounds, meaning that they are getting bigger investments when they are more established. This indicates that investors are becoming more comfortable with investing in AI companies and that they see a lot of potential for growth in this space. Here is a chart showing the share of total VC funding going to AI startups by stage of financing. As you can see, the share has been increasing over time. Also, AI startups are raising larger amounts of money in each funding round. Here's a chart showing the average amount of money raised by AI startups by funding round. As you can see, the average has been increasing over time. These trends indicate that AI startups are becoming more attractive to investors and that they are able to raise more money as a result. Another interesting trend is the increasing number of AI startups that are going public. As we mentioned earlier, several AI startups have gone public in recent years through traditional IPOs or SPACs. This allows them to raise money from public investors and to get a valuation that reflects their growth potential. It also provides liquidity for early investors who want to cash out some of their shares. All right, now that we have covered the current state of the AI startup ecosystem, let's talk about how you can actually invest in these companies. There are several options available to you depending on your investment goals and risk tolerance. The first option is angel investing, where you provide funding to a startup in exchange for equity. This is typically done in the earliest stages of a company's development and carries the highest risk, but also has the potential for the highest returns if the company succeeds. Platforms like Republic and Seed Invest allow accredited investors to invest in private companies. Another option is venture capital, where you invest in a company that is already demonstrated some traction and has a plan for scaling up its operations. This option typically requires a larger investment but also carries less risk than angel investing. Platforms like Cowboy and First Round Capital focus on early-stage investments, including those in artificial intelligence. And the third option is the public markets, where you can invest in companies that are listed on a stock exchange. This is the most accessible option as it does not require you to invest in private companies, and you can easily buy and sell shares through a brokerage account. However, the potential returns are lower as the companies are more established and have a lower growth rate. You can find many AI companies listed on major stock exchanges, but it's important to do your research before investing, as not all of them are equal. Some examples of publicly traded AI companies are NVIDIA, IBM, Microsoft, Alphabet, and Amazon. Before investing in any startup, it's important to do your own research and due diligence to assess the company's prospects for success. This includes evaluating the company's technology, its team, its market share potential, and its financial performance. While investing in AI startups can be potentially very profitable, it's important to be aware of the risks involved. These companies typically operate in highly competitive industries, and there is always the risk that their technology will become obsolete, or that they will face regulatory uncertainty. In conclusion, the AI startup ecosystem is full of potential for investors looking for high-growth opportunities. By understanding the key sectors and trends in the market, conducting thorough due diligence, and diversifying your portfolio, you can position yourself to benefit from the growth of this exciting industry. So don't be afraid to take calculated risks and invest in companies that you believe in. Who knows, you might just be able to ride the next AI wave to success. Thank you for tuning in, and we'll catch you next time. Until then, remember to stay curious and keep learning. After all, knowledge is power.